Holy smokes everyone, the Federal Reserve has messed up and they've messed up big. The stock market and the cryptocurrency sell-off is continuing, and we've just got some new data and new information today that is going to be the final nail in the coffin for more rate hikes from the Federal Reserve and much sooner. And I've also found out the reason why Jerome Power all of a sudden flipped on inflation and on it being transitory in December, and people, it is something much simpler than we think. So everyone, this is going to be a good one. We've got a lot to cover. Let's not waste any time. Let's get straight into it. Okay, so first things first is this everyone, S&P 500 is poised for its worst start to the year since 2016. Now this is crazy everyone, because everyone was expecting, a Santa rally and a big start to January. January is a good time for stocks. A lot of people may have sold their stocks in December for tax loss harvesting and may have started to rebuy in January, but it doesn't look like this is going to happen. And we've just got some new data today, hot off the press, that is causing this sell-off in the markets. And when this data came out, it was a big shock for the markets. The S&P 500 fell over 0.5% and the Nasdaq fell over 1%. But this is the first week we've seen in a long time that the stock market has been red day after day, and it doesn't look like people are loading up on this dip. So this is what everyone is so worried about. Hiring falters in December as payrolls rise only 199,000. Though this is the big thing, the unemployment rate fell to 3.9%. And the reason why this is so important, everyone, and so important for the markets, is because the unemployment number, even though there still is issues going on in the jobs market, this is the number the Federal Reserve looks at, and we're pretty much getting very close to full employment. But it wasn't just the unemployment rate that spooked the markets. It was this bit of information, everyone. It was this bit of information here, everyone. Wages increased more than expected, rising 4.7% year over year. And leisure and hospitality showed the biggest gains by industry. And I'll also bring up a chart here of the 10-year US Treasury. We can see here when this data came out, it spiked to almost 1.8%. Now you may think, oh, just employment data, it's a bit boring, but this is a key bit of data, because not only is the unemployment rate falling, but also wages are increasing faster than expected. Now what does that lead to? More inflation, because it creates a cycle where consumers can now go out there and spend more, and it makes inflation go higher. Then businesses have to put up their prices. We're seeing the labor shortages, so they have to increase wages again and again, and that's what creates this cycle of inflation. So this is going to scare the Federal Reserve. Going to be very interesting to see what they got to say during their meeting this January. But it wasn't just this, everyone. We also got more information that inflation is getting worse and we're going to see more rate hikes. So this news came out today as well. Eurozone inflation has hit a new record high in December. And look at this, everyone. This figure represents the highest ever. That's right, ever on record. Are you starting to get a picture? This inflation is no joke, and we got to take it serious. Now, I was doing a lot of thinking yesterday, and I was thinking, why did all of a sudden Jerome Powell and the Federal Reserve flip on inflation and flip and say, okay, we're going to start lifting interest rates much sooner, tapering our balance sheet and tapering our asset purchases in December? So what happened in December to make Jerome Powell change his mind? Was it some new great economic data, some new insights into the market? No, everyone. Like I said, it is something much simpler than that. This is what happened after November 22nd, everyone. President Biden nominated Jerome Powell to serve as Fed chair again. So to put it simply, Jerome Powell, he wanted to keep his job. He wanted to be re-nominated as a Federal Reserve chair. Now that he's got his job again, he's finally admitted, yep, I was wrong on inflation. And yes, we're going to have to taper faster. Yes, we're going to have to start lifting interest rates, whether it crashes the markets or not. But something I keep hearing people say, and what worries me, is they say the Federal Reserve can't lift interest rates because it will crash the economy and crash the markets. But what I keep saying and what I keep thinking is they can't not lift interest rates, otherwise it'll crash the economy and crash the markets because of rampant inflation. The latest CPI data was 0.8% last month. When you annualize that, it's 9.6%. But remember, every month it compounds. So really what we have right now is double-digit inflation. And we all know inflation is much worse than the CPI data. And like you've probably seen, Shadow Stats has inflation at 15% like they recorded it in the 80s. And is it a coincidence that since the 80s, since they started printing all this money, we haven't had this high inflation? It's because they changed the way they record the data. Now look at it like this. If they don't lift interest rates now because they don't want to crash the markets, well, then inflation is going to get worse and worse, and it's going to be harder and harder to stop. Then that means they're going to have to lift interest rates higher and higher to combat it, like in the 70s and 80s when they had to jack interest rates up 15 to 20%. So it's actually better that they start lifting interest rates now, and really they should have done this 6 months ago to try to get on top of it before it gets out of control. But this is really the situation they're in, everyone. Hedge you lose, tail you lose. Will it crash the economy or will it crash the dollar? This is what happens when you try to cover up all the problems by printing money, by throwing money at a problem. It doesn't fix the fundamental issues, and it doesn't fix the issue that eventually in markets we need corrections. There are time and seasons for everything, and just like in business, there are cycles. You can't just have a party and good times all the time. So really what we have to do and what the Federal Reserve has to do is let the free market do its thing and let the market figure out for itself what a good price to pay for shares, for housing, etc., without manipulation and without artificially jacking up prices. Now, quickly, for all my Bitcoin and crypto investors, it isn't really looking good, to be honest. For Bitcoin, we can see here it hit a low of $41,000 today, and we're seeing continued selling pressure. But I'm actually surprised that we haven't seen a big drop of 10 or 15% like we normally do when there's a lot of fear in the markets, but it is slowly grinding down, we can see over the past week. And what happened last time in 2017 and 2018 when the Federal Reserve started lifting interest rates? Well, that was the end of the bull market for the last cycle, and that's when we saw Bitcoin fall around 75 to 85%. So if we continue to see a sell-off in the stock market, cryptocurrency is going to go down with it, because people are saying it's not correlated with the stock market. I think it is very correlated with the NASDAQ and high growth tech companies and risk on assets. Bitcoin, whether you like it or not, it is a risk on asset. And it's funny because last year, during the middle of the year, I was following a lot of these big crypto YouTubers, and they're all agreeing that yes, we are going to enter into a bear market at the end of 2021 and early 2022, like what normally happens in the cycle 18 months after the Bitcoin halving, where the reward for miners get dropped in half. Normally 18 to 24 months after that, we do enter a bear market cycle. But unfortunately, a lot of these big crypto YouTubers may not want to admit that because they're going to lose a lot of revenue. Now, I'm not saying all of them, some of them are good, but I'm seeing a lot of them in denial right now. So everyone, it's looking like this dip is slowly turning into a rip. And unfortunately, a lot of these stock picker YouTubers keep telling you, buy the dip, buy the dip. Well, there's been about 20 dips right now. And unfortunately, I think they're a bit out of touch with their audience. People don't have unlimited amounts of money to buy every dip. And they're not making hundreds of thousands of dollars like these individual stock picker YouTubers are making to continue to buy the dip every month. A lot of people may only have $1,000, $5,000, $10,000 to invest in the markets. They can't just continue to put money in every month like others. So everyone, it was another bloody day in the markets today, with the Russell, the small caps falling around 1%, the NASDAQ down around 1%, and the S&P 500 falling down nearly 0.5%. And like I was saying, I don't think the worst is over. But everyone, that was just a quick update to show you what's causing this sell-off today, why things may get worse. What do you think is going to happen? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.